Good morning, traders and investors. My name is Roger Scott. Today is January 6th. It's a Wednesday. It's the third trading day of the year. And what do I always say? Let's get into it right now. Well, the big news is last night we had the Georgia debate. We had the Senate runoffs. And boy, oh boy, let's look at the market. NASDAQ right now is down 1.45%. And the Russell is at new highs. Democrats continue to lead. The results are not 100% there, but right now it looks like Democrats are going to get the Senate. They're going to have control of the Senate and the House. So that is where we're at right now. It's not 100% sure, but it's almost sure. And that is at least what the Russell is telling us. And folks, the Russell has been leading ever since the first debate between Donald Trump and Joe Biden. And it still continues to lead. All you have to do is look at the market and have an objective opinion, and it'll tell you exactly what's leading. Let's talk about news, then we'll talk about global economy, and then I'll give you guys a hot pullback stock to trade. So yesterday we had the manufacturing numbers. The manufacturing numbers were actually better than expected. We were expecting 56.5. We got 60.7, which is telling me that the backlogs of orders is coming through, and there is increased commerce in manufacturing going through, which is very, very important. Today we have ADP employment report, which will reflect on the employment numbers that's coming out tomorrow, factory orders, petroleum, and FOMC minutes. I'm not expecting anything from the FOMC minutes that we don't know, because this Fed likes to tell us what they're going to do a year in advance. This is the Fed that I want to play poker with. Tomorrow, the big report is tomorrow, jobless claims and international trade in goods and services. I believe international trade in goods and services will be good because that has a big impact on China versus US, and China has been getting their stuff together as far as exports. And now in terms of manufacturing, America's looking better. So I believe this international trade in goods and services number will be positive. The big report tomorrow will be jobless claims. Folks, again, we've been near this 800,000 new claims every week now, and we have not seen any relief. We need the number to drop below 700,000. The 4-week moving average is not even close to that, and with this $600 Americans are getting, I just don't know. I don't know for sure if it's going to have enough impact. The bottom line is we have 1 in 5 people in California infected with COVID. Ambulances are being instructed to not even pick up people that are doing so bad that they're not going to survive, and jobless claims are rising. That's not happiness. That's not good for the economy, excuse me. So that's the number we want to look at tomorrow. That's going to have a big impact on the stock market, in my opinion, and the employment data to a lesser degree. But the big report is going to be jobless claims. And the factory orders, I think that's going to be big, big, big. But I think based on the manufacturing numbers, I think we're going to see good factory orders, a decent employment report, if jobless claims can go below, start dipping again and staying low. Global economy, let's talk about that. Folks, world shares were mixed. U.S. futures declined Wednesday. Not all the futures. Small cap futures actually rose Wednesday as investors awaited full results of the Senate runoff election that will determine whether Democrats take control of both House of the U.S. Congress. And it looks like they're going to do it. Traders are focused on the outcome of the runoff elections in Georgia Tuesday, which will determine which party controls the Senate. Some analysts say the results could make clear winners and losers in the stock market. Well, it's definitely going to set a trend and a tone, but I'm going to tell you something, folks. The best stock market returns we've had in the last 50 years, and I'm just a messenger, I'm just reporting, has been when we've had a Democratic president and a Democratic Senate. I know it sounds very counterintuitive. I'm a Republican. I like checks and balances like the other guy, but I'm telling you, I'm actually going to dig this up and read it to you one of these days. Maybe the next session we have. But the best return, double-digit returns, the average return in the S&P has been 6% per year over the last 22 years. I think it was like 12 or 13% on the S&P 500 when the president was aligned with the Senate. But again, higher taxes, breaking up big companies. Oh boy, we're in for a surprise, especially over the next 60 to 90 days. I'm expecting some volatility. The expectation is that Democratic sweep might lead to higher tax rate, tougher regulations on businesses, and other potential profit crimping changes from Washington. Yeah, that sounds about right. That would put broad pressure on the stock market, with big tech stocks in particularly perhaps attracting more regulatory scrutiny. Absolutely true. Investors are waiting the potential impact of, this is ridiculous, of the executive order from Donald Trump banning transactions with 8 Chinese apps. The order takes effect in 45 days when Joe Biden will be president. Folks, I'm going to tell you right now, I'm going to make a little prediction. The biggest thing Joe Biden is going to do is undo 90% of everything President Trump did. That's going to be his goal. He's pretty much has said it. This will have very, very little impact because we will not know what a trade war is in 25 days. Biden says he's going to be tough on China. I don't believe it. And here's another thing that I'm looking at. Investors remain optimistic that the U.S. economy will bounce back this year as more Americans receive COVID-19 vaccinations. Folks, don't hold your breath. It'll happen, but it's going to happen second part of the year. We are extremely exposed the first part of this year because most hardworking Americans don't have access to COVID for at least another 90 days. And that is not going to change. If you're over 65, if you have a medical condition, you can get it now. But if you're healthy, you can't. And guess who makes up the workforce? Healthy Americans. It's not good. Anyway, the bottom line is we're still waiting and holding our breath that the COVID vaccine will come before this jobless claim report goes back above 1,000 or 1 million unemployed new claims every week for unemployment. That's what the hope is. That's really what the hope is, that we're going to get some aid, more aid, or we're going to get the vaccines before this number hits. This is in thousands. This is 836,000 before this number hits 1 million. Because if we have 1 million jobless claims every week, how is that going to impact the GDP? How is the economy going to grow? It's not. All right, I think I've said enough. Now, in terms of technicals, I like the Russell. I like small cap stocks. I don't like large cap stocks right now. I don't like the FANG stocks. If you are going to invest in the NASDAQ, look at this. It's down 1.5% before the open. It's already hitting. It's probably going to hit the 50-day moving average over the next few weeks. So this is how it's going to look in terms of strength. You're going to have the small caps, the Russell 2000, followed by the Dow Jones. Let me see how the Dow's doing. Followed by S&P, followed by the NASDAQ. Yeah. You're still going to see a little strength in the Dow because that doesn't have a lot of the regulatory stock. It has more of the blue chip stocks. Then you're going to see, so first is this. This is where the strength is going to be. Russell 2000. Then you're going to have strength in the Dow. And I did not look at this ahead of time. I just know it based on the stock compilation and what's going on with one index. Then you're going to have S&P. It's got a little bit more of the NASDAQ 100. You see that? And then you're going to have the QQQ. So strength to weakness: Russell 2000, Dow Jones, S&P, NASDAQ 100, and you should remember that. That's going to set the tone for the foreseeable future, and I'll show you why. Look at Facebook. Look at when the stock made all-time high, September 2nd. Look at Amazon. Look when the stock made all-time high, September 2nd. These stocks have been lagging. These are stocks that have been leading the index for the last 2 years. They're lagging right now. I don't know if Nvidia is in that mix too. Let's take a look. Yeah. So again, FANG stocks is not where the money is. The money right now is in smaller stocks, solar energy stocks, pot stocks, especially if this is going to happen today, if this is official, if Democrats control the House and the Senate, oh boy, pot stocks up, solar stocks, renewable energy stocks, disruptive tech stocks. As a matter of fact, let me give you a disruptive tech ETF. I like this. Let's see. Transformation changes. Look at this thing in the last year. Transformation. Look at its profile. Transformation seeks investment of the Global Transformation Changes Index. Yeah, so there's other ones. Let me give you another one. DTech here. Here's some DTech. That's it. DTech. Disruptive technology. That's where you want to be. Disruptive technology right now. Profile, again, disruptive tech index. But if you look at these stocks, most of these stocks are not, they're smaller stocks because they're disruptive tech. So they're doing things that are new, like cloud tech, like evergreen, like renewable, self-driving cars, that kind of stuff. Now, let me give you one stock that I'm really liking right now. The ticker symbol is TJX. TJX. Now, I'm not really crazy about retail right now because consumer spending is drying up, but this is a discount store. This is where people go to buy discount goods, leading off-price retailer. Look at the 1-year return, 8%, but look at the 3-year return. Look at the 5-year return. And revenue, this stock has been doing positive, and I would not rule out consumer discretionary right now. It's still a positive sector. So I'm not a big FANG guy right now. I'm not a big top FANG guy, but I still like consumer discretionary stocks. And if retail begins to lead, remember, these are cheaper retail stores. So people who are looking for discount bargains but still need clothing use these stores. And I really like the stock right now. It is making a 90-day high and a 10-day low. So I would be buying it right around the 97 level and putting a stop loss at the 65 level. That's as far as I can get. I can't give you the option or the price. For those things, you're going to have to subscribe to our services. But this is the kind of analysis we do in our VIP room. And if you want more info, shout out to me and I'll let you know. That's where me and Craig do all this, and then we place real-time trades and so forth and so forth. And we've been accurate about 85%, believe it or not. But folks, I don't even have a link for you. I'm just talking. But folks, I've got something important for you. Imagine a trading strategy so powerful that when applied accurately, it can give you a chance to trade with near perfect accuracy. Sounds impossible, right? Wrong, it's not. And for a limited time, you can learn the strategy that a 10-time heavyweight trading champion Chuck Hughes used to profit from 97% of his positions that he took over the past 2 years. Last 22 trades, I think he had one loser. Chuck is hot. I mean, this guy is hot. Do not miss the opportunity to learn Chuck's trading secrets. We were together yesterday. We were talking. Man, Chuck he knows his stuff. That's why I call him the heavyweight trading champion. And I want you guys in on this. Click on the link below for complete details of how you can get in on Chuck's next trophy trade. Don't delay. Do it now. We're talking 1,300% gains, 1,100% gains. I think his account was up 1,300%. He's got real-time brokerage statements, real testimonials with brokerage statements. You've got to check out Chuck. Chuck Hughes is one of a kind. One of a kind. You've got to check this out. Click the link. Learn all about trophy trades. Do not miss out, especially in this market environment. And have an amazing week ahead. Bye, folks.